After a detailed assessment of the evolving macroeconomic and financial developments and the economic outlook, as I mentioned, we are forward-looking, the MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. I repeat, the MPC unanimously decided to reduce the policy rate by 25 basis points from 6.5% to 6.25%. Consequently, the standing deposit facility, SDF, the SDF rate shall be at 6.0%, and the marginal standing facility rate, also called the MCF rate, and the bank rate shall be 6.5%. The MPC also decided unanimously again to continue with the neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth. I shall now state the rationale for the decision in brief. The MPC noted that inflation has declined, supported by favorable outlook on food and continuing transmission of past monetary policy action. It is expected to further moderate in 2025-26, gradually aligning with the target. The MPC also noted that though growth is expected to recover from the low of Q2 of 2024-25 this year, it is much below that of last year. Last year, you are all aware, it was 8.2%. This growth inflation dynamics opens up policy space for the MPC to support growth while remaining focused on aligning inflation with the target. And accordingly, the MPC decided to reduce the policy rate, by 25 basis points to 6.25%. At the same time, the MPC felt that excessive volatility in global financial markets and continued uncertainties about global trade policies, coupled with adverse weather events, pose risks to the growth and inflation outlook. This calls for the MPC to remain watchful. Accordingly, it decided to continue with a neutral stance. This will provide MPC with the flexibility to respond to evolving macroeconomic.
If you like the video, do like, comment, share and subscribe.